How many just read my first comment in the beginning? We're going to be talking, I'm going to take supply and demand to a different level for you. All right. I'm going to teach you supply and demand like you haven't heard supply and demand before. All right. We're going to go over some stuff that's just going to be like, for some of you, it's probably going to hurt your brain. I like to do that from time to time.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
For others, it's going to be the light bulb moment. It's going to be like, oh, I get it. That's what I've been missing. For some of you, you're going to be like, man, I ain't ready for that. But that's fine. You're going to get it, and you need this. You need this, okay? So I want everybody to take notes. I want you to gather up all this stuff, everything. I actually have the recording on this week. I forgot to record last. I'm sorry. But I'll try not to do that again. Now, let's take a look at this chart. So first things first, which direction are we trending? Right here. What is our most recent trend? All right. I'm just looking for quick answers in the chat. What's our most recent trend right here? All right. Simple uptrend, right? We're looking at a uptrend right here. Let me grab my arrow. You can see from here to here, we're moving up. Okay. So obviously this is an uptrend. Price is moving in a bullish direction. Now, when we see an uptrend, what are we looking for? We're looking for a pullback. Okay. There are times in the market where the market gives us these beautiful indications, and it doesn't always happen, but it gives us these beautiful, beautiful indications of something that's going on in the market. So when we look back, we see that, let me grab my annotation. When we look back here, we see that we got a touch here, a touch here, a touch here, a touch here. And now what used to be resistance in here is becoming support in here. All right. So everybody's with me on that. That's beginner class 101. All right. So resistance right here becomes support right here. All right. And so that indicates to us that price is now showing a rejection at the support level. So expect a push up. Okay. So that's simple. That's easy to find out. When we look and we see that we have resistance, and now that resistance turns to support. It finally breaks through and then comes and retests what used to be a resistance, making it a support, and price pushes up. That is the easiest trading that we can possibly have. Okay. Very simple, that when we see structure in the market, we want structure to be tested. This right here, my friends, was an absolutely beautiful, beautiful setup for a nice little trade on the 4-hour chart. We saw price break through. We saw price come back and test that same area. We saw how price pushed down, but wicked out real hard through a massive pin bar here. And then price took off, started heading back to the upside. All right. So easy money right there. That's just very beginner. Now let's take this to the next level. So the first thing that we have to understand is that if we know that there was support and resistance in this area here, and then price came back and tested it here, just like I've been saying, then we know that that's an area that the banks are going to continue doing business in. We know that that's an area where price wants to react, if price wants to be there, okay? So when we see multiple touches in the same area, especially when we see touches from both sides, we have to ask ourselves, number one, how many times has it been touched? Because the more that area has been touched, the weaker it becomes. Any supply demand level, any support resistance, any trend line, any area of support and resistance, whether it's horizontal or diagonal, anytime we see that, the more times it gets touched, at some point it's going to get broken. Okay, it's like, you know, you have a strong door and I hit it, boom, and I hit it again, and I hit it again, and I hit it again. At some point I'm gonna hit it and it's gonna break, right? At some point I get to finally break through that door if I hit it enough, right? And that's what's happening here. Price gets hit, that level gets hit, oh man, are we through? No, not yet. We try again, and then finally, boom, it hits and gets broke through. And it finally gets broke through. Now, that same area, how many times has it been tested from the opposite side? Well, guess what? It's only one. Now, can it be broken after one touch? Yes. There's no rule that it has to be touched 3 times, that it has to be touched twice, or that it cannot be broken if it hasn't already been tested. There's no rules that say that. What I'm saying is, when you have a structure level that is consistently being tested over and over again, at some point that is going to be broken, okay? And the stronger that level, the more times it can withstand the pressure of buyers and sellers. So let's say, for an example, let me come down here for a second, and we'll come right back to the candles. Let's say, for an example, that we have price that moves up and we get a big level right here, right? So price comes down and moves, right? We obviously see that we have levels in here, but those levels are kind of fluid because they're not the extreme high or the extreme low. Now, the likelihood is that when price comes back all the way to this extreme high, that's going to be an area that's going to be difficult to break. So if we see price approaching this level in here, we ought not to be thinking buy going into that level. We should not be trying to buy into this level, because we know that this is a very strong extreme high that has not been tested numerous times. So the likelihood is that price, and again, everything's probabilities. There are no guarantees, because it could just fly right through there. It could happen, but it's not likely. It's not probable, okay? When we see price approaching this area, the likelihood is that it's going to reject and come back down, okay? So why? Because we have one touch, we have nothing in the middle, and then finally we get another touch. And it's going to probably come back down into these middle areas to play around in that average where price likes to be, in the middle. Price does not like to be at extreme highs or extreme lows, because when price is at an extreme high, it's too high and the buyers can't get in. And when price is at an extreme low, the sellers don't want to sell. Even though there's lots of buyers, they don't want to sell too low. What they want to do is they don't want price down here and they don't want price up here. When we do see those extremes, we generally come back to these middle grounds, these middle areas, and that is where price likes to be, where buyers and sellers can come to agreement on a price. If I come to you and I sell you my, exercise bike, I don't know, whatever. I just recently sold an exercise bike. If I come and I sell you an exercise bike and I say to you, hey, listen, I want $5,000 for it, but you're like, that's too high. But you say, I'll give you $500 for it. And I'm like, man, that's way too low. at some point we can come to an agreement somewhere in the middle, because it suffices you and it suffices me. The buyers can be happy and the sellers can be happy, and that's where price likes to live. Does that make sense to everybody so far? So this is super simple so far. So here's the next thing we have to understand. When price comes to these areas that are highs and they finally break through, what's going to happen is it's going to come back and it's going to test that area again. Why? Because the same people who were selling here, let me blow your mind. Ready? Buyers and sellers are the same people. Buyers and sellers are the same people. When banks that sell will turn around and become buyers, and banks that buy will turn around and become sellers. They don't buy. I mean, do you think that these people, these big institutions, are buying currency down here just so they can accumulate more currency and hold it for the rest of their lives? And when they retire, they're all going to divide it up and keep it. Right? No, they buy the currency so they can sell the currency. It's real simple, right? And so the people that sell up here are looking for deals down here so they can sell up here again, right? This is simple, like super simple, like economics class. Buyers and sellers are the same people. These people are doing business, buying and selling. So think about it. If they were selling here, when price finally broke through and it's retesting that same area, the people that were buying back here are likely looking to people that were selling back here are likely looking to buy here. Why? Because now a new high has been carved out. So they said, if I was making money at this price, imagine how much money I can make at this price, right? If you have a business selling eggs, let's talk about the price of eggs right now. My goodness. If you are a grocery store and you're selling eggs for $1.99 a dozen, and now price is $7 a dozen, you're looking for a price down here because you know that the selling point is up here. Okay, why? So if I buy here and price comes back up into my area of a high price, I can likely get more money and then sell, right? So that's how business works. It doesn't matter what business you're in, Forex or retail or, material sales, construction, real estate. It doesn't matter what market you're in. At some point, this is about buying and selling from high to low. Okay, is everybody with me? So the people that were selling here are buying here because they want to sell here again. Now, if that is the case, if that's what we're doing, then we have to understand how to find these areas of people doing business. So if this is the area that market has already shown us that business is being done, then we can look at the next area. Now, when it breaks, this is only the first touch of that same area. This isn't the third and the fourth and the fifth touch. This is the first time that price has come back down here. First time. Okay? So if that's the case, then we are generally, again, probabilities. These are not guarantees. These are probabilities. But we are likely not looking for price to drop. We're probably going to see price test that area, and before it can break through that area, we're probably going to see it come up and at very minimum test this area again before it comes down and test this area again. And it might end up basing out, but 1, 2, 3, maybe that 4th time it finally breaks through. Maybe it continues to go up. I don't know. But my point is that this is what we call a fresh zone. A fresh zone, meaning that it has not been tested yet. Okay? Now, let's fast forward a little bit.